Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. And please excuse my voice. I'm still recovering from a cold. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions and comments there. I'm also on X. My name there is @DougPless. Here are the key tenets to my approach to trading. I believe in options trades and market maker hedging activity are key drivers of price in many stocks and futures. And this is certainly the case for the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with the S futures. If the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Excuse me. All right, here's my agenda for today, Wednesday, March 19th. First of all, I want to go over news items, economic data, and events for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll get to the live market. Obviously, today, the FOMC announcement is out at 2 p.m., and the press conference begins at 2:30 p.m., so I will stop whatever I'm doing at 2 p.m., and we'll watch the live market, mainly the S&P 500 and the NASDAQ. All right, let's get to news items now. So again, FOMC day, announcement at 2 p.m. This is the CME Fed Watch tool. The current Fed funds rate, current target rate, 425 to 450 basis points. And there's a 99% chance, this is according again to the CME Fed Watch tool, that the Fed holds rates steady, and only a 1% chance of a drop. All right, so that's the market expectation, not expecting any change to rates. But of course, the market will be watching parsing the statement, and then of course watching the press conference very closely. All right, so that is today. Let's take a quick look at the rest of the week. So the main event on Friday is the options expiration. I did talk about this Monday, so I won't go into detail today. Very quickly, this is showing market makers delta notional for the S&P 500, NASDAQ, Russell 2000. Delta notional on the vertical axis. And then this is the March expiration, very large expiration. Blue bar is showing negative gamma put, that is put delta notional, negative. And the orange bar is showing call delta notional positive. And obviously the blue put delta notional dominating. And a good bit of these puts will expire on Friday. That could lead to a potential rally on Friday or next week. All right, so that is the big events, FOMC, and also options expiration on Friday. All right, so let's move on now to positional analysis. I'm going to start with the S&P 500. This is the ES futures and Bookmap. Note I am on the June contract there, the M5 June contract for ES and NQ. All right, let's take a look at a higher time frame before we take a closer look at this chart. I'm going to go to the SPX, the underlying index. Excuse me, this is a 1 year, 1 day chart in Thinkorswim. Recent correction. Price broke down below the uptrending linear regression channel, found support right around 5,500, and has attempted to rally after that. All right, so that is the note also that the SPX is trading below the election gap. All right, let's take a look now at a closer time frame. Let's go to a, excuse me, a 30-day 1 hour chart. 30-day 1 hour chart showing support. This was last Thursday, right around the 5,500 put wall. Again, a rally attempt after the big drop that began a couple weeks ago. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market, based on the closing price for SPX from last Friday. Dashed blue lines are showing the lower and upper daily expected move, also based on the options market, based on the closing price for SPX from yesterday. I do post those levels in Discord every day the evening before. And for SPX, the expected move today was plus or minus right around 61 points, which to me seems fairly small considering the high implied volatility as well as the, FOMC today. So this indicates to me that perhaps traders are not expecting that much movement out of the FOMC. So we'll see. The stage is certainly set with negative gamma for big moves, but the market not necessarily expecting that. All right, so those are the expected moves. Let's take a look at the Spotgamma levels now. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim, a 30-day 1 hour chart. I'm going to take a look at the key daily levels, and I'm going to start with the put wall. Now at 5,500. That's a strike with large net negative gamma. That can be expected to act as support. That level did move down from yesterday. All right, the next level up is the absolute gamma strike at 5,600. That's a strike with large absolute positive and negative gamma. That level remained in place from yesterday. Next level up is the Volatility trigger VT there at 58.25. That is Spotgamma's proprietary volatility. Excuse me. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And that is why we're expecting a lot of movement today. A negative gamma environment with SPX trading well below its volatility trigger. And the volatility trigger did shift higher from yesterday. Finally, the call wall is back up at 6,500. That's a strike with largest net positive gamma that can be expected to act as resistance. And of course, that level is well out of play for today. All right, to summarize the shifts in levels for SPX, put wall shifted lower and the volatility trigger and call walls shifted higher. And for SPY, the volatility trigger also shifted higher and the put wall also shifted lower, and also the absolute gamma strike shifted lower. All right, let's wrap up our view of SPX with a 1 minute chart, just so we can get a close look at the levels in play. All right, so here's that support on last Thursday, just above the 5,500 put wall. Price gapped up the next day, found support. This is last Friday at the JP Morgan collar long put strike. That's at 55.65. We'll see that on Trace in just a minute. And then found resistance right around 5,700. And then back down to 5,600. Again, support. So key support levels for the last few days, 5,500, 55.65, and then 5,600. All right, let's go to Bookmap now. In Bookmap, I have sorry about that. Still, again, this cold. All right, so on Bookmap, I have SPX and SPY levels shown on this chart. I use the price lines add-on so I can show these levels and key levels. Again, SPY. Right around SPY 562, that's just a round number. Support after the cash open. And this 565 level, that was the level, that was the launching point for that big move down yesterday, just after the open, after the VIX expiration at 565. I believe it was a large gamma 4 then. And here is SPX 5650. There's a combo 3 level just below that. And note there is a difference in price between ES and SPX. And with the new M contract, the June contract now, that spread has widened out quite a bit. So the offset now between ES and SPX, again with the June contract, is right around 53. So ES minus SPX equal 53. So I'm showing SPX 5650 there at ES 5703 to show the equivalent levels. And I do post those index relationships that I'm using every day in Discord. All right, so that is the S&P 500. And now let's take a look at NASDAQ. All right, this is the NQ Futures of Bookmap. Some key levels in play for today. And let's take a look at those levels in isolation by taking a look at first of all, the QQQ chart. Then we'll take a look at QQQ, NDX, the underlying indexes. Then we'll get back to the NQ chart. Support just after the cash open, right around 475. There are 2 spot gamma levels there. Spot gamma, the 475 is the large gamma 3 level, and then the 475.05 is a combo 4 level. And we'll see a couple of NDX levels right on top of those. And that was support this morning. 479 call wall around that level acted as resistance. QQQ traded up to around the 480 volatility trigger. There's a combo level just below that. Now back down below both the volatility trigger and the call wall. All right, so that is QQQ. Let's take a look at NDX. And this is what I meant by these NDX levels right on top of the QQQ 475 levels, acting as support this morning. Good launching point for long. And that is the 500, 19,500 large gamma 2, and then the 19,503 combo 4 level. And then right around this 19,968 level, acting as resistance. So QQQ levels lining up very well with NDX levels. Again, for support and resistance. All right, back to Bookmap. So again, in Bookmap, I have my own price line levels here, so I can show the NDX and QQQ levels on this chart. Here's that cluster of support levels, both QQQ and NDX. Good launching point for long. Resistance at the 497 call, 479 call wall right there. And then there's that upper cluster of levels with the 2 QQQ levels and the 2 NDX levels. Right, actually, I'm sorry, 1 NDX level. All right, let's wrap up our positional analysis by taking a look at Gamma. Then if I have time, I want to take a look at a few stocks quickly. There were some interesting setups in Hero this morning, large block orders that were driving the indexes. All right, let's take a look at Gamma Notional now. Let's go back to the S&P 500, and then we'll go to take a look at Gamma Notional. This is market maker's position on the Gamma curve at the beginning of the day. For the S&P 500, NASDAQ, Russell 2000, note all these numbers are negative. They're quite negative, indicating for an index, traders are long puts, market makers are short puts. Hence the negative Gamma, they have to trade with price to edge their delta exposure, again enhancing or increasing volatility, looking for a wider trading range in negative Gamma. And note, all these numbers did shift more negative, with the exception of IWM, which shifted slightly less negative. All right, let's take a look at a current view of Gamma. This is the trace tool. This is available to Spotgamma subscribers. The red shading is showing negative Gamma. So in this view here, there are a couple of notable strikes. First of all, this is the JP Morgan long call strike, long put strike. So this is showing market maker's position. They're negative. It's negative Gamma. They're short puts, so negative Gamma. And then up here at this 5,700 level, that's a little bit of positive Gamma. There at 5,700, indicating traders are short calls, market makers are long calls. So the two key strikes. Note stability index is quite low at 2%, and very dark red shading, negative Gamma. Looks like earlier today, SPX also found resistance at the Spotgamma implied one-day move high. All right, so based on this, my thesis, I was looking for high volatility for today, and then also direction really just depends on the reaction to FOMC. All right, let's go back and let's take a look at a few setups. I've still got about 10 minutes. I'm going to start with the S&P 500. And this is the hero tool. This is showing options trades and market maker hedging activity for the S&P 500 index components, SPX, SPY, ES, and XSP. So this is the index signal showing puts and calls combined. Let's zoom in on this. Really interesting this morning. Initially, it looked like another drop like yesterday from the open, and then the hero signal shifted abruptly higher, and this was also fueled by this large vertical bar here in the hero signal, and I call that an institutional kickoff. Came in again, large block orders with shift to puts and calls. And it was not as apparent here, but large block order of calls. So some large institution buying calls. We'll track that down in just a minute. And excuse me. Typically, we use the index signal to mark the turning points in the market, and then the equity signal that we'll take a look at in just a minute to show overall price direction. So it's the index signal is a little bit more noisy, better at showing the turns in the market, the pivots, and then the index signal a little bit better in showing the overall direction. So this morning, there was that reversal higher, and then a call peak right here, right around 10:10. Flow alert comes in just before that reversal, signaling significant options activity, a potential reversal in hedging flow from positive delta to negative delta. That's exactly what happened. At that point, blue line, orange line moving the same direction, and price moves down. Setting up a short in the morning, and that lasted for a while, and then the call buyers came in again. All right, so that is the index signal. Let's take a look at the equity signal. And here this institutional kickoff is much more apparent. So this is in one or more of the S&P 500 stocks. So this is showing options trades, market maker hedging activity for all 500 stocks in the S&P 500 index. Quick reversal in the hero signal there. Large block order, that was at 946, and it looks like it was at 946 to the second. Right around there, large block order. This is showing large institutional orders, buying calls, and selling puts. Institutional kickoff, hero signal moves higher, and then flattens out. And this is a typical pattern looking at both of the hero signals, with the equity signal really flattening out, and then the reversal signal in the index signal here. And you can see the index signal starts to move lower before price actually starts to move lower. So this is a very typical pattern that you can see with both signals. The reversal comes more clearly in the index signal, and then the equity signal just flattens out. And that was, again, short-lived, just really a pullback. All right, let's go take a look at Bookmap now. Back to ES. Let's zoom in a bit. There's that sharp reversal. Note the light blue line here in Bookmap is showing that large traders were already buying that move down. They were fading that move down with iceberg orders, large orders they used to hide their size. And as those block orders came in, hero signals shifted higher, price moved higher, and then found resistance at this 565 level as the equity signal leveled off, and then the index signal showed a reversal. All right, so that was long setup this morning, then just really a pullback, and then the reversal coming later around noon. All right, let's track down those large block orders, and then we'll get back to the indexes. Zoom in a bit. This is Apple. A little bit of block order there, much more apparent in other stocks, but a very good long this morning. Bullish opening drive, a little bit of consolidation at the 215 hedge wall, then a break higher. Amazon, large block order, very, very prominent here. Price moves higher. Some traders taking, large traders taking a long position in options. Hero signal flattens out and Amazon consolidates. Let's take a look at NVIDIA. Bullish day in NVIDIA. Here's that block order in NVIDIA. Also in AMD. Very prominent, very nice setup here in AMD. Institutional kickoff, and then a very nice trend day. AMD breaks above the 104 call wall. And then finally Broadcom, another institutional kickoff. The nice trend day up in Broadcom, a little bit of consolidation at the 190 hedge wall. If we have time later on, we'll take a look at those stocks. All right, so I'm going to set up for the FOMC now. So I'm going to open up another instance of Hero here so I don't have to keep zooming. And sorry for you NQ traders, just didn't have time to get to that. If I do have time, we'll take a look at that. So I'm going to go to the focus on the S&P 500 here. Go to the full screen, equities. Let's zoom in a bit. All right, so I can just move from one tab to another. So we're zoomed in now pretty closely, getting ready for FOMC. Zoom in again. And all right, let's go to Bookmap now. Go to the ES. Whoops. Zoom in just a bit. All right, I've got about a minute. And I'm going to open up YouTube TV on another screen so I can watch CNBC. So this will be delayed a little bit, but I'll see what comes out in the announcement. All right, so again, widely expected that the FOMC will hold rates steady, and we'll see how the market reacts to the announcement and the statement. All right, so far bullish reaction. We'll take a look at Hero in just a moment. Of course, the Fed funds rate unchanged as expected. All right, so a little bit of resistance at the 565 level. Combo level just under that. I'll wait another maybe 30 seconds and then we'll see how options traders are reacting. Fed says uncertainty has increased. It's pretty obvious. Attentive to risk on both sides of mandate. That is inflation and full employment. All right, let's take a look at Hero now. And I am gonna have to jump because this is a beta here, so I'm gonna have to jump back. Tends to lose the signal pretty quickly. Take a look at the equity signal. Yeah, still this isn't going to work. I'm going to have to go between the two. So I'm going to have to do a lot of zooming. Sorry about that. All right, so the Hero signal for the equities moving higher. Fed boosts 2025 core inflation outlook to 2.8% from 2.5%. Sorry about all the zooming. No choice here. All right, back to Bookmap. All right, the level that acted as resistance earlier today, as well as yesterday, acting as resistance again. Yeah, that's not going to work. All right, so I'm just going to have to zoom. Sorry about that. Let's go back to the index signal. All right, does anyone have any questions, comments, anything you want me to take a look at? Let's take a look at the NASDAQ. NASDAQ definitely looking bearish. This is the NASDAQ index signal. It's been making a series of lower highs, lower lows since around 1110. Also for NASDAQ today, for QQQ, there was a bearish hat trick. The volatility trigger put wall and call wall all shifted lower. All right, let's take a look at Mag 7. Not quite as bearish as the NASDAQ index signal. Let's go to Bookmap. We'll take a look at NASDAQ. NASDAQ again finding resistance at the earlier resistance level. So it looks like kind of a big head and shoulders pattern, just like the ES. Head and shoulders pattern for the day. Back to NASDAQ. All right, so by this time, all the algos have parsed the statement and now waiting on the press conference. Again, any questions, comments, anything you want me to take a look at? All right, let's take a look at some of the stocks that I mentioned this morning. Then we'll go back to the indexes. So here's Apple. Let's take a look at Hero for Apple again. Very bullish opening drive. Consolidation around the 215 hedge wall. Breakout above that level. Then a peak pattern and price reverse lower. So bullish opening drive for the first 40 minutes. And then price reverse lower. Shift to puts and calls. Very nice call peak pattern here. This is a very, wrong tool. Very reliable reversal pattern. Traders abruptly start buying calls, start selling calls, price reversal lower. So just like the index signal, around that time, traders were selling calls and buying puts. So that was a bullish opening drive to a call peak reversal and then bearish continuation on the way down. So 3 hero patterns there. At play in Apple. Amazon, remember the only thing notable about this really was that large block order. NVIDIA. Bullish day in NVIDIA. Let's go back and take a look at Hero for NVIDIA. So NVIDIA traders are selling puts, buying calls. Right around 10:10, they stopped buying calls. A little bit of a call peak pattern there, and setting up just a reversal by the dip reversal. And then after about 11 o'clock, traders resumed buying calls. So at that point, they were buying calls and selling puts. That really continues now. So let's go to NVIDIA. Also, a lot of traders are buying stock. You can see all the green volume dots, rising cumulative volume delta. And Quant Scalper wants to take a look at Charm on SPX. Sure, we'll do that in just a minute. All right, so NVIDIA bullish day. Right now, traders continue to sell puts and buy calls. And remember, AMD, those, I didn't have time to set up price lines for AMD. Reversal right around 102. Aggressive buyers come in. Rising cumulative volume delta, and very nice bullish uptrend in AMD. Same for Broadcom. A little bit more choppy here in Broadcom. Not as clean a pattern. But a reversal and a institutional kickoff. Now it looks like Broadcom has found a resistance right around 192, 193. Let's take a look at Hero. Go to Broadcom. And that is the call buyers have slowed down, taking the foot off the gas. All right, let's go back to the S&P 500, and Quant Scalper wants to take a look at Charm. All right, so let's go to Trace, showing Gamma now. Let's take a look at Charm pressure. And Quant Scalper, one thing to keep in mind is the overall Gamma environment is very negative. In a negative Gamma environment, the expectation for a pin at a certain level is reduced. So we can take a look, see where there may be potential or pinning potential. So kind of hard to put a lot of weight on that on an FOMC day in a very negative Gamma environment. But if we were looking at a potential pinning target, we would look for an area of blue buying support below and red selling pressure above. Right now, that is coming in right around 56.80. And we'll keep an eye on this for the next few minutes. All right, so Quant Scalper, I hope that makes sense. That's my take on it. In a positive Gamma environment would not much news. I would put more weight on a pin target and Charm. All right, back to Hero, S&P 500. Now moving higher, it looks like now the S&P 500 has broken out above that resistance level, and the Hero signal has resumed moving higher. Let's go back to Bookmap. Go back to ES. So maybe that 5680 target is attainable. Let's take a look at let's go to our SPX 1 minute chart. So there's 5680, just above the upper daily expected move for SPX. Take a look at NASDAQ. All right, so NASDAQ back up to the resistance level at QQQ 480. That was the head of the Head and Shoulders. And Quant Scalper says, keep an eye on the VIX dropping, I assume. Yeah, we could take a look at that. Let's take a look at VIX. So here's VIX right here. Right now, down 6.77%. All right, NASDAQ backed up to the highs of the day. And ES not quite up at the highs of the day. Any other questions, comments, anything you want me to take a look at? All right, back to Hero. Equities. Equities Hero signal continues to rise. A little bit of a dip in the index signal. Duzman asks, could you please speak more on how you analyze high time frames? I'm really looking at how price reacts at levels. So the most important time frames that I'm looking at are I look at the 1 day, 1 year chart to get an overall sense. So I know that SPX has really been correcting recently. Then look at the 30-day 1 hour chart to see how price has reacted at different levels. And I know this 5,500 level was key support. Then looking at this 1 minute chart, just showing, I really am showing about 5 days worth of data, 5 or 6 days worth of data. Then I can see the key support levels in more closely. Whoops. 5,500, there's that 5,500 support, then the 5,565, and then the 5,600, and then the 5,700 resistance. So I'm looking for the overall trend and key reversal levels and support and resistance levels. Then I also watch how the levels shift every day. So that's about it. And Duzman asked, is the 1 minute only showing 9:30? This is SPX. So SPX trades only during regular trading hours. So this is not ES, this is SPX. Excuse me. So the dark shaded areas are showing regular trading hours. SPX closes at 4 p.m. and the SPX options close at 4:15. They reopen sometime during the night, but this is showing the SPX cash index. Then the dark shaded areas are just indicating the market is closed. So regular trading hours only for SPX. So overall today, this is showing a very simple view of SPX today, trading at really a pretty narrow trading range. And Duzman asks, why the SPX over the ES futures for the 1 minute? Good question. SPX, remember my introduction, SPX is the underlying index. So I focus on the levels primarily for SPY and SPX. So again, SPX is the underlying index. SPY is the ETF version of that index. So there are really two versions of the underlying index for ES futures. So ES futures, the contract that everyone has been trading for the last 3 months will cease to exist. That's the March contract that will cease to exist on Friday afternoon. So that and then the new contract has been around for a while, but people really start trading that on last Monday, this Monday this week. So I focus my attention on SPX, and Spotgamma certainly focuses their attention on SPX as well. Let's go back to Bookmap now. I hope that makes sense. So again, SPX, the underlying index, and then if you want to trade the actual component, not the options themselves, then you have to trade ES or SPY shares. And ES is essentially just 500 SPY shares. All right, so choppy, kind of a general uptrend after the announcement and the statement. At this point, participants waiting on the press conference. Check NASDAQ. So it looks like NASDAQ may be finding a resistance at the level again today at the 480 absolute gamma strike volatility trigger. Let's take a check of Hero. Check equity signal. A little bit of a peak pattern there. And Duzman says, makes sense how futures used for hedging. Yeah, exactly. Glad that's making sense. So traders are buying, sell puts and calls, buying and selling puts and calls in SPX and SPY. And then market makers, it's much more efficient for them to hedge their delta exposure with ES futures, which, again, one E-mini is equivalent to 500 shares of SPY. SB equities topping out a little bit. Same for the index signal. Let's check NASDAQ. Still moving lower. Mag 7. Also moving higher, but a little bit of a top now. All right, so the indexes have settled down. Now, of course, again, waiting for the press conference to begin. Let's take a look at another look at Trace. No real changes. So we're looking at charm pressure now. Let's go back to Gamma. Very low stability index. Can't get any lower than that. 0%. Stability index. Anticipating potential very high movement, fast movement in the as the press conference begins. I'm going to zoom all the way out. All right, so what this is showing is very negative gamma as far as this chart shows. From just a little bit above 5,700 all the way down below 5,500. Very negative gamma, looking for fast movement, and then a pocket of positive gamma up above right around 5725. All right, so that's at full zoom. Go back in a little bit. Back to Bookmap. So chop now, again, waiting on the press conference to begin. Any more questions, comments? And Slow Razi says NVIDIA is making highs of the day. Yeah, very bullish day in NVIDIA. Let's check Hero. Go to NVIDIA. Traders continue to take positive delta options positions. Looks like maybe slowing down a little bit. Equity signal. All right, so the S&P 500 index signal now definitely turning lower. Equity signal has flattened out a little bit, and equity signal, index signal turning lower. All right, remember, options expiration on Friday. This is a very big options expiration, very large. For SPX, there are two expirations. The AM settlement, so a lot of the puts that are set to expire on Friday will expire at the open on Friday. That's the AM settlement. And then there's the PM settlement. So the remaining SPX options that are set to expire on Friday will expire at the close on Friday. So AM and PM settlement, very put-dominated options expiration, and expecting as those puts come off that market makers may be able to buy back some short hedges, leading to a potential rally. All right, everyone, my time is up. Press conference is beginning now, set to begin. So I'm going to wrap it up and let you get back to trading. Thank you very much for watching. Thanks for your questions and comments, and have a great day. Good luck trading the press conference, and I will see you next Monday, and I will be in Discord chat, of course, for the rest of the week. All right, thanks again, everyone, and I will see you on Monday. Bye.